Yo, what's good, everybody? Welcome to part 6 of the course. In this section, we're going to be discussing support and resistance, and in today's video, we're going to be going over the basics of support and resistance. What in the hell actually is support and resistance, and how to identify it on your charts, and also the power that lies in support and resistance, and how, support and resistance can help you determine, a probabilistic outcome on a trade. So, just understand before we dive into this, support and resistance is the only thing that I really use to trade. Support and resistance, supply and demand, liquidity zones, order blocks, it's all the same shit, whatever you want to call it, right? I call it support and resistance. You can call it whatever. You're going to hear it called all types of different things. You're going to have people, come up to you, or you're going to hear people talking about different things. But ultimately, it's all the exact same shit. All it is support and resistance is the areas in the markets where, traders are making decisions and where pools of equity, they pile up. Okay, that's literally all support and resistance is. So support is the floor, resistance is the roof, and that's the easiest way to determine support and resistance. The easiest way to find this on charts is to determine and see where, prices touched multiple times and rejected. So, for example, I have two examples drawn. The one on the left is obviously bullish structure, and the one on the left is bearish structure. Looking at the bullish structure, we can see, so basically the S is support, obviously resistance is the R. So as you see, price came up, rejected this area, came down, came back up, retested that area. So obviously that is resistance. Price cannot break above that. Therefore, it is a ceiling. Price can't get above it. It is resistance. Okay. And then as you see, price is obviously forming, higher low, and then price breaks higher, creating a higher high off of the higher low. So now this is your last significant higher low. Now, what did we talk about in the last section is, finding setups based off of, pullbacks or breakouts. So being patient, I'm waiting for a pullback. Now, where do I expect it to pull back to? My previous resistance zone. So as you can see, price comes up, and then it comes back up into resistance, rejects it, comes back down, and then it forms support at the previous level of resistance. So support and resistance, keep in mind it is a zone, not just a singular line here. I use lines because it's easier for me to see. But some people, if some people like drawing zones, you could do that if you're into that. You could, if that helps you see it better, that's fine as well. But just understand that resistance is, the roof, and then price comes back to retest that previous level of resistance. We're hoping that it holds as support being the floor. So price comes back, it retests, it holds, comes back into it, holds again. Either one of these are good entry points. Why? Because ultimately, this whole thing right here is one leg. Let me get a different color on this. So this whole thing, I think red, I don't know how good red shows up. I guess we'll do blue. So obviously, in basic structure, you have your boom, you have your pullback, then you have your extension higher, and then you have a pullback. So all this stuff right here is just simply a pullback into your previous level of support or your previous level of resistance, hoping that it holds as support. So now obviously this is an area to take buys at because we have a couple confluences lined up. We have, a bullish trend, and we're going to go over more of that in depth. But just ideally, you have a pullback into support. At support, we're looking to buy because we're expecting price to bounce off of it. At resistance, we're looking to sell. But remember, in this example, we are in bullish structure. So what are we looking for? We're looking for buys. So we don't care when price is at resistance. We're not looking to sell it. Okay, we're only looking for buys. And to do that, we have to have breakouts for new highs and then be patient for those retests. Where are we looking for retests? At the previous level of resistance, hoping that it holds as support. So then same thing, price comes up, rejects resistance, forms a higher low, and then price breaks out for a new higher high, this being the last significant higher low. We have new highs. What are we anticipating? We are expecting, not really expecting, but we're hoping that we get a retest, a pullback, and a retest of previous resistance. As you can see here, we have previous resistance because the price tried 3 times to break above this level and just couldn't do it. It kept rejecting. We finally break above. There's going to be a ton of orders built up here and just pools of equity. So hopefully when price comes back into it, it holds as support, and then we can see that rejection and then go to the upside to go create new higher highs. So that is the example if you're looking at a bullish market. Now remember, we don't counter trend trade. So if price is bullish, we're only looking for buys. I don't care if it comes up into resistance and rejects back down. I'm going to be patient and wait for a buy setup. Unless price does something like this, where price, let's say it does something like this and then breaks under this last significant higher low. Why is this a last significant higher low? Because this is the highest high, and that's the push that created that. So now we are bearish structure. What can we anticipate from this point? If we drag this out, obviously support and resistance holds over here just as it does over that way. Okay, so now where can we anticipate the pullback? So now here's really simple. Okay, we have now broken out. We're bearish. Okay, we have new lows. This is the last significant lower high. So as long as price stays below that, we're wanting to sell. Where are we looking to sell at? Here's a pretty good idea, at the previous level of resistance and support. Okay, why is that? Because it's already proven that price wants to reject this zone, and there's going to be, this is where a bunch of traders are making decisions. This is where sellers are entering the market. It's where buyers enter the market. This is where people are making a bunch of decisions. So what is the probability if we get a pullback into this zone that we see a rejection and continuation? I would say the probability is pretty high due to the fact that we have rejected 1, 2, 3, 4 times. So what are the odds that it rejects again? I would say pretty high. So obviously that is a good idea, or a good ideal area to take a sell. Stops going above last significant higher low, because that would invalidate the trade if it hit that, and obviously targeting new lows. Now, why would we be looking for buys on this half and sells on this half? It's very simple, because we're buying or selling with alignment with the trend. On the left side, we have bullish structure, so we're looking for buys, and then price reversed. So now we are looking for sells. Where are we looking for sells at? Same concept. You're looking for sells at previous levels of support and resistance, same as you're looking for buys on the left side. So then obviously on the right side, I'm not going to really break this down too much because I just did over here. It's the same shit, just applied over here. So if you're in a downtrend bearish structure, you're only looking for sells, right? Where are you looking for sells at if you have breakouts for new lows? You're waiting for pullbacks to previous levels of support, hoping that price holds as resistance and sellers into the market. This is an ideal setup right here. You're taking a sell here with your stop loss going above the last significant lower high. So it would look something like this. Now obviously there's more that ties into it, like you'll have candlestick confirmations, your higher time frame correlation and all this stuff. But for now, we're just tying together market structure and support and resistance, the absolute building blocks of my trading strategy and how I take entries. So the stop loss would go above here, because if price comes above that, then that means structure is bullish. We no longer want to be in sells. And then obviously we'll go over more on like take profits and stop losses and whatnot. But anyways, that's like pretty much how you use market structure and support and resistance to find setups and find high probabilistic outcomes. Now, I'm going to draw up a couple other things, and I will see it in 2 seconds. All right, now looking at this example, so we have obviously bullish structure. We're forming higher highs, higher lows, higher high, higher low. This right here being the last significant higher low. So price is bullish as long as we stay above that, meaning we're looking for buys. So in this example, what are we looking for, or what can we, look at the market with a probabilistic outcome and expect price to do if we're right here? I would say we can expect, or not expect, but anticipate a bounce from this level. Now, obviously, there's more that goes into it, like I've said, candlestick confirmations, market patterns, and all that stuff. But we can anticipate market to bounce from this level. Why? Because we did it here, and we did it here. It also held as resistance here. So we can anticipate with a good probabilistic outcome that price is going to bounce from this level and go on and continue to make higher highs and higher lows, because we're in bullish structure and we now have a pullback to support and resistance. And just remember that support and resistance is, areas where people are making decisions. And as you can see, the market already gave us a hint at what it wants to do at this level right here. and right here. And as you can see at those two levels, we had buyers into the market and push price higher. So now we can anticipate that to happen again. Obviously, this would be a decent ideal for a setup. And then where does your stop loss go? In this example, you're going to have a relatively tight stop loss due to the fact that this is your highest high at this point. And then what created that? This. So that's your last significant high or low. So now your stop loss can go relatively tight, because if price breaks this, then that means we're now in bear structure and looking for sells, which would invalidate this trade. And then obviously we're not going to go over like take profits and stuff like that just yet. We'll do that in a later segment. But just remember, whenever you're approaching, market structure and market structure and support and resistance, it's all probabilities. Like this trade right here could easily go against you. You could easily enter a buy, and with the same mentality, like, oh, we're in bullish structure, anticipating buys, everything's looking sweet, we have an ideal 5-to-1 risk reward setup, this is going to be sweet, and then price just does this. Sorry, pal. Okay, if this happens, no worries, we flip our perspective. Okay, so now that price broke through the last significant high or low, we are no longer looking for buys, we are now looking for sells, with this being the last significant lower high, because this is the new low, this is where the push came from. Now we're looking for sells. Where can we anticipate to take sells from? Okay, once we've created these new lows, well, we can anticipate a pullback. The first area is a major area of support and resistance. Okay, so now we can anticipate if price pulls back into here, there's a pretty good probability that price rejects, because it proved that it did it here, did it here, did it here. Okay, broke through. We can anticipate sells to take part off that level. So that is pretty much it for support and resistance basics. In the next video, we're going to go actually into charts and find more setups and maybe give you more of, an advanced approach to support and resistance. But for now, that's all, and I'll see you guys in the next one. Peace.